Studies Section 12, Departmental Account. Introduction. In our preparation of income statement in the previous study sections, we assumed that the business operates as a single unit. However, in practice, the operations of many business organizations can be divided into different departmental units. In large general stores, for example, you can have different departments such as food items, cosmetics, and toiletries and household appliances. In an insurance company, you can have separate departments like life assurance, marine insurance, motor insurance, and fire insurance. Objective. At the end of this study section, you should be able to 1. Prepare final account of a departmental company, and 2. Give appropriate treatment to interdepartmental transfers and joint costs. Pretest. 1. Briefly explain the treatment of the following items in departmental accounting questions. A. Interdepartmental transfer. B. Apportionment of departmental expenses. 2. Slutsky's business is carried out in 2 departments as follows. Department A, stationery. Department B, hardware. The following balance was extracted from his books for the year ended 31st December 2004. Stock 1/1/2004. Department A, 5,000. Stock 1/1/2004. Department B, 4,000. Purchases Department A, 236,000. Department B, 164,000. Sales Department A, 300,000. Department B, 200,000. Rent and rate 1,008. Office expenses 1,002. Insurance 1,000. Repairs to premises 2,900. Stock 31/12/2004. Department A, 6,000. Stock 31/12/2004. Department B, 3,000. Additional information. All common expenses should be apportioned in the ratio of sales. You are required to prepare a departmental trading profit and loss account for the year ended 31st December 2004. Contents. A. Justification for departmental account. When you prepare separate account for each department, you will be able to ascertain the contribution of each department to the overall profit or loss. You will get additional information for making decisions. An example is the decision to determine whether a department should be closed down or not. B. Peculiarities of departmental accounts. To prepare final accounts of a departmental business, you will still use the same format that you have used for a non-departmental business. The only difference is that you will divide the income statement into columns. You will create separate columns for each department in addition to column for total. However, you need to apportion joint expenses between the departments. You also need to identify interdepartmental transfer, if any, and record it appropriately. C. Apportionment of joint departmental expenses. My first advice for you is to read the question very well. This is because, in many cases, the question will include specific instructions on the basis of apportioning joint figures. If you cannot identify the appropriate basis of apportionment from the question, you should use the following rules. Items. Selling and distribution expenses, e.g. selling commission, discount allowed, bad debts, carriage inward, advertising, etc. Discount received. Eating and lighting, rent and rates, staff costs, salaries, medical expenses, welfare expenses, fixed asset related costs, insurance of fixed asset, depreciation, etc. Basis of apportionment. sales value, purchase, volume of space occupied, floor space, number of staff, book value of fixed assets. D. Interdepartmental transfer. When goods purchased by one department are transferred to another department, you will deduct the value of such goods from the cost of goods available for sales of the department that transfers it. To complete the adjustment, you will add the equivalent figure to the cost of goods available for sales of the department that receives the goods. Example: the following trial balance for the year ended 31st December 2001 was extracted from the books of Pillsbury Store. Debit in Naira, credit in Naira. Capital. Credit side 10,000. Drawings, debit side 2,000. Stock at 1st January 2000. Department A. Debit side 1,140. Department B. Debit side 980. Purchases. Department A. Debit 3,960. Department B. 3,740. Sales. Department A. Credit 7,400. Department B. 6,630. Interdepartmental transfer. Department A. Credit 250. Department B. Debit 250. Returns inward. Department A. Debit side 350. Department B. Debit side 280. Wages and salaries. Debit side 1,650. Advertising. Debit side 870. Dividend on shares in X Limited. Credit side 105. Shares in X Limited. Debit side 2,300. Debtors. Debit side 4,920. Creditors. Credit side 2,974. Carriage inwards. Debit side 240. Rent and rates. Debit side 1,830. Furniture and fittings. Debit side 1,500. Sundry expenses. Debit side 740. Bank. Debit side 684. Provision for bad debt. Credit side 75. Total debit side 27,434. Total credit side 27,434. Additional information. 1. Write off bad debts of 120. 2. Increase the provision for doubtful debts to 5% of the book debts outstanding. 3. Sundry expenses owing 40. 4. Provide for depreciation of 10% on furniture and fittings. 5. Stock at close. Department A 2,960. Department B 1,700. 6. All expenses are to be allocated between the departments in the proportions. Department A 2/3. Department B 1/3. 7. Interdepartmental transfers were made at cost price. Solution. Department A. Sales 7,400. Return inward 350. Making 7,050 on deduction. Department B. Sales 6,630. Return inward 280. Making 6,350 on deduction. Total. Sales 14,030. Return inward 630. making 13,400 on deduction. Less cost of goods sold. Opening stock, Department A, 1,140. Department B, 980. Total, 2,120. Purchases, Department A, 3,960. Department B, 3,740. Total, 7,700. Carriage inward, Department A, 160. Department B, 80. Total, 2,400. Making 2,400. Total Department A, 5,260. Total Department B, 4,800. Making 10,060. Interdepartmental transfer. Department A, 250. Department B, 250. Total, nil. Cost of goods available. Department A, 5,010. Department B, 5,050. Total, 10,060. Closing stock, Department A, 2,960, making 2,050. Department B, 1,700. Making 3,350. Total, 4,660. Making 5,400. Gross profit, Department A, 5,000. Department B, 3,000. Total, 8,000. And other income, dividend for X Limited. Department A, 70. Making 5,070. Department B, 35. Making 3,035. Total 105. Making 8,105. Less expenses. Wages / salaries, Department A, 1,100. Department B, 550. Total, 1,650. Advertising, Department A, 580. Department B, 290. Total, 870. Rent and rate, Department A, 1,220. Department B, 610. Total, 1,830. Sundry expenses, Department A, 520. Department B, 260. Total, 780. Bad debt, Department A, 80. Department B, 40. Total, 120. Depreciation, Department A, 100. Department B, 50. Total, 150. Increase in provision for doubtful debt. Department A, 110. Department B, 55. Total, 165. Making 3,710. And Department A. In Department B is equal to 1,855. Total, 5,565. Net profit, Department A, 1,360. Department B, 1,180. Total, 2,540. Balance sheet. Fixed asset. Furniture and fittings. Cost, 1,005. Depreciation, 150. NBV 1,350. Investment share in X Limited. NBV 2,300, making 3,650. Current assets. Stock Department A 2,960. Mistake there. Take 3. Current assets. Stock Department A. Cost 2,960. Stock Department B. 1,700. Depreciation. Stock B 4,660. Debtors 4,920 to 120. Cost 4,800. Provision for bad debt. Cost 240. Depreciation 4,560. Bank depreciation 684. Total depreciation 9,904. Current liabilities. Creditors cost 2,974. Sundry expenses owing cost 40. Depreciation 3,014. Working capital NBV 6,890. Net asset 10,540. Financed by capital NBV 10,000. Add net profit 2,540, making 12,540. Drawings NBV 2,000, making 10,540. Summary. The preparation of departmental account for a department will facilitate the ascertainment of the contribution of each department in addition to the overall profit or loss. The procedure for preparing final account for a departmental business is similar to that of non-departmental business. The main difference is that you will create separate columns for each department in addition to total column and apportion joint expenses between the departments on a given rational basis. You also need to identify interdepartmental transfer, if any, and record it appropriately. This is the end of Studies Section 12. Thanks for listening.